When it comes to the aged care means test, there's a lot of people who fear that they're going to end up paying everything they own, while others think if it's means tested, it must be affordable. The reality is going to lie somewhere in between. So it's important to understand how the means test works and what it means for you and your particular financial situation before you sign on the dotted line. When it comes to the aged care means test, couples are assessed on a 50-50 basis. So half of the assets and half of the income apply to each. That's a general rule. So how does it work? Well, the aged care means test, generally speaking, includes all of your assets and income worldwide. So, and then you need to look at whether or not your assets are financial assets or just general assets. So things like your bank accounts, your shares, your managed funds, your investments are both assets that are deemed to earn income. So they count for both assets and income under the aged care means test. Your pension also gets included in your income, as well as distributions from companies and trusts, things of that nature. When it comes to the family home, that tends to be the greatest source of concern when it comes to the aged care means test. So there's two different ways in which the home will be assessed for the aged care means test. The first is if there is a protected person living there. If a protected person is living there, the home is exempt. And a protected person includes your spouse or dependent child, a carer who's been living in the home for at least 2 years who is eligible for an Australian income support payment, or a close relative who's been living in the home for at least 5 years who's eligible for an Australian income support payment. I think it's also really important to know that carer's allowance is not an Australian income support payment. So make sure that you're working with what is an Australian income support payment. So under those criteria, the home is not included. When the home is included, it's only included up to a capped value. So they don't include all of the home in the aged care means test. When it comes to couples and the aged care means test, the general rule of thumb is that the assets and income will be assessed on a 50-50 basis. So each member would be considered to have half of the assets and half of the income. And the first person moving into aged care would not have the home assessed because the other person's still living there. If you'd like more information about this or any other aspect of the costs associated with support at home or residential aged care, head to the Aged Care Costs and Fees Hub, where you'll find some great information and some articles.